Hi, good morning, everybody. My name is Sonia Steinway. I am a member of Tech Coast Angels. I'm also an entrepreneur in residence here at UC San Diego. Paul Robin is going to say a few words to get us started. Paul, go ahead.
Thank you. Well, what is it, afternoon? Good afternoon, everybody, and welcome to this this wonderful Toolkit event. Thank you to the team for putting this together. I think these are great events to put on, and very much thank you to Tech Coast Angels, our partners in this. I really believe that it's these types of collaborative events that are going to bring a huge amount of value to the community. There are so many entrepreneurial-minded people on campus, and through the information that you can get from these type of events, it really allows them to bring their ideas further down the line and have some terrific impact. So I love these types of events. I hope we can do more of them in the future. And to all you entrepreneurs out there, by the way, there are so many different ways to engage with the campus. As you heard from Sonia just now, she is an entrepreneur in residence. And we are currently looking for our next cohort, to recruit our next cohort of entrepreneurs in residence. So if there's any EI entrepreneurs out there who'd like to engage with the campus, please look us up. So with that, thank you very much to everybody, and I hope you enjoy the event. Thanks, Sonia.
Thanks, Paul. Appreciate it. So now we're going to just introduce each of the panelists pretty quickly. And just as a note, this will be recorded, so no need to take comprehensive notes. Okay, Maisha, can you introduce yourself, please?
Yeah, hi, my name is Maisha Cobb. I am actually a second-year MBA student here at Rady at UCSD. I will be graduating in a couple of months. I'm excited there. And I have been a member of Tech Coast Angels for the past 9 or 10 months, and it's been a great experience. Happy to be here.
Okay, thanks, Maisha. Shawna?
Hi, I'm Shawna Monterey, CEO of BeanStock Ventures. We are investors and members of Tech Coast Angels as well. I'm also a UCSD IGE MedTech Accelerator mentor as well, and also a member of the NIH Commercialization Readiness Review. I am a UCSD alumni. I graduated in 2000 with a Bachelor of Science in Computer Science.
Very cool. Okay, Christopher?
Hi everyone. Christopher Ray. I'm currently SVP of sales for a company called Verimatrix here in town. But I was also a Rady MBA grad like Maisha, and prior to this also helped raise $300K of seed funding from TCA for a startup that I did back in 2003. And now I've been with TCA for about 2 years, so relatively new as well. Thanks.
Great. And Sami?
Hi everyone, I'm Sami. I'm currently a PhD student in the Neurosciences graduate program here at UCSD. I'm a third year working in Dr. Jean Yo's lab, where I'm hoping to identify new therapeutic targets for Huntington's disease. I got involved in TCA a few months ago now, and I'm currently a volunteer analyst, where I get to learn about how VC really works, how angel investing works, and I get to help with due diligence.
Awesome. And as I mentioned, my name is Sonia Steinway. I am a fintech entrepreneur. I'm also a recovering attorney. And here at UCSD, I'm an entrepreneur in residence. So I've been working with a number of initiatives across campus. And my particular passion and interest is around increasing diversity within the entrepreneurial community. Awesome. So we have two quick announcements before we dive into our questions. The first is that there's an annual Innovation Expo coming up on health and wellness on May 27th. So to register, go to the Eventbrite site, Innovation Expo 2021. And the second, I'm going to let Sami discuss Nucleate Bio.
Hi, I'm starting a program, Nucleate Bio. It's a biotech entrepreneurship program aimed at bringing together MBA students and current scientific trainees to facilitate the formation of new life science companies. So we're hoping to launch the program in the fall. So if you want to learn more, if you want to be involved, please fill out the form on this slide or reach out to me. Yeah.
Awesome. Thank you, Sami. So we have a number of questions, and if you have additional questions, we'd love to hear from you. Please use the Q&A function, not the chat function, so we can see your questions. Okay, with that, I'm going to ask each of the panelists to respond to these questions, and I'll call on everybody, but also feel free to engage and discuss with each other. So the first question is, what is the difference between angel investment and VC or other funding sources? When or why should a startup consider approaching each source? And I'm going to start with Shawna because I see she's unmuted.
Perfect. So angel investment is usually about 500K. It's generally after you bootstrap your company and obtain funding through family and friends. VC investment is quite larger checks. It's usually focused on commercialization readiness, while angel is focused primarily on getting you to your Series A, B, C funding. I think when you should start considering when to approach, let's just focus on angel investment, would be when you have a product and a team that's mature. I say that now because I noticed that in angel investing, it's getting a lot more competitive. We're seeing a lot of companies come in that are more mature than we've seen in the past. But with that said, we're also seeing check sizes where, outside of the 500K, where companies are exiting because VCs are now participating in the angel rounds and syndicating. And we're seeing, any check sizes of $2 million. And so it's a very exciting time. But with that said, it is becoming more and more competitive.
Great, thank you. Maisha, would you have anything to add to that?
Yeah, I love Shawna's answers. And I also think about it as the angel investing, it's sort of a shorter time horizon in my mind. If I think about the VCs, they typically have funds that last a little bit longer. I love the comment about this being more of a seed type of investment with the angel investment, which in some ways I think is great for entrepreneurs who are looking for dollars, because even though I do think you have to be a little bit more ready, you may not have to be as buttoned up as you would be when you were looking for venture capital dollars. It also means that you get the benefit of having mentorship through angel investments, whereas I think with VCs, they're looking for a seat on the board. So it's a little bit of a different pressure that's probably put on you as an entrepreneur. And I would say that any startup who has proven that they can generate some revenue, maybe hasn't figured out how to optimize that business model yet, isn't quite at the stage of fully being commercial ready, as Shawna mentioned, should approach a VC. I'm sorry, an angel investment group.
Christopher, anything that you'd want to add to that?
For you. I think the other thing just to add there is that angels can kind of work together to be able to raise money, such as TCA, where you have a syndicate. Whereas, if you're going out and talking to individual investors, that's 25 different conversations that you're going to have. Angel groups tend to pool all that together so that you have one set of term sheets. So it makes it really easy for getting investment from a variety of people together in one round.
And I think, Christopher, that actually raises one point that I think is a big difference between angel investment and VCs, which is a VC is not investing its own money in a sense, right? There are partners, limited partners who are putting money into the VC. So you have a core of professional investors. And so they ultimately have to pay back that money. So the VC model kind of inherently is looking for massive wins, right? It's not good enough that they just get twice their investment back. They're really looking for big hits. So they're usually a little bit bolder. They're willing to take a little bit more risk. An angel investor, by contrast, typically is investing for herself, right? So that's one of the reasons they may invest smaller amounts of money, just depending on the size of their funds, but it may also be more personal. It's a little bit easier as an angel investor to just say idiosyncratically, I like these kinds of investments. I don't like these kind of investments. Or, I have what's called an investment thesis. I will only invest in companies that look this way. So it's a little bit, in some ways, almost more idiosyncratic than VCs, even if VCs seem idiosyncratic. Sami, did you have anything you wanted to add before we move to the next question?
No, I think everybody covered everything.
Great. And somebody asked in the chat, is angel investment the equivalent of seed investment? And I would say the way to think about seed is the stage of where an investment is. So a seed is just your first round or maybe your second round of funding. Sometimes people will do what's called raise a family and friends round, which is literally going to the people and asking them for a little bit of money. That's opposed to what we call a Series A, a Series B, or Series C round. And those are just sort of stages of when you get investment. Along that whole spectrum, you could have an angel investor. It just means it's a, it's an individual, not necessarily an actual venture capital fund that's had outside investors in it. Okay. So next question, and I think because Christopher, you teed this up in your answer, I'll let you address this one. What are angel investing syndicates like TCA, and why should a startup apply to TCA for funding?
Sure. So this is a great question. So in the absence of a syndicate, you're having to raise money with individual investors. And so first of all, you have to start off and say, well, who do I already know? If you've already exhausted your friends and family and can't tap that for anything else, then you need to go out and start fundraising with individual people who are accredited investors. What the syndicate is able to do, and I'll talk about both as a local group, but then also as a larger group. So you could come to something like Tech Coast Angels San Diego and be able to pitch in front of a couple hundred investors all at once, and be able to get a term sheet out of that represents all of those investors pooling their money together. Additionally, TCA has other chapters in Los Angeles and Orange County and Santa Barbara and so on. And so you also get the benefit of being able to pitch to a larger audience there. And so the syndicates really kind of help pool the resources together to help you get more funding faster, rather than having to do the fragmentation of going out and talking to dozens of individuals yourself.
Sami, what do you think about that? Anything you want to add?
I think that was an amazing answer. I like that TCA is this big group of individuals all coming together, like Chris said, instead of having to go and try to find funding from, not only family and friends, but trying to find other small angel groups. Yeah, I don't know what else to add.
Sure. Maisha, anything that you'd want to add?
Yeah, I'm going to build on what Sami said. I think it's a really good point that you actually have a bunch of expertise within TCA. So it's not like you have to be a master in all of these different areas. You're able to really tap into the collective wisdom of the organization, which in my mind makes the due diligence process go a lot smoother. You get a lot of rich, different ideas and thinking that help you look at the deals from all different kinds of angles.
Yeah, I think that absolutely is correct. And Shawna, anything you'd want to add?
Yeah, I'd like to talk about the current model with TCA. So prior to joining TCA, they relied on individual investors to make independent investments around check sizes of 50K each. So it took the entrepreneur a while to get the masses and the interest that was needed to get the larger check size, right, of the 500K I mentioned. And so TCA came up with this model where now we have a pooled fund. So the independent investors now invest in this fund and we vote on the fund. And what we started seeing is that we're writing bigger check sizes, there's more consistency, and there's higher engagement because it's lower risk to us, right? Because now we get a piece of every startup that is actually invested from the fund, right? And so we get diversification as opposed to 1 or 2 investments a year, which takes, decades for us to get the diversification that's needed. The other thing I wanted to say is that not only does VC, will seed money or Tech Coast Angels provide the cash you need to move your product forward, but it also increases your visibility, because a lot of times our events are sponsored by VCs and they actually attend all of our events. So you're getting that visibility right from the beginning. And so they understand what your product is doing and where you're headed. And when they start seeing traction and funding and you're providing status updates, then it starts getting excitement. You're starting to build the relationships, as Christopher said, right? Being engaged in that ecosystem where you can actually now be closer to the VCs for your follow-on funding.
Yeah, I think that's a great point, Shawna. I think there is a validation effect of who your investors are. And so sometimes it's, if you're in a particular space, it's the venture capitalists that focus within that space. There are a handful of angel investors that have kind of a name for themselves. But if your strategy is to go to a lot of angels, first of all, that can be a real administrative headache to try to manage. But something like Tech Coast Angels is going to have a lot more impact on that cap table for you than my name as an individual, for sure.
Sonia, can I just add something too about
Please.
why a startup should apply? And I don't want to make it seem like everyone who comes to Tech Coast Angels is going to get funded too, right? The reality is There's a lot of deals that we see that don't get funded, but I think there's also really good learning that happens when you don't get funded. You go through the pitching process, you get to hear the kinds of questions that investors are looking for. And I think if nothing else, even if you don't get the funding, you learn about what you might need to do to tighten up your business model.
No, for sure. And I think our executive director, Ashok Kamal, does a really great job of providing folks with resources, no matter where they, if they get turned down anywhere in the process, he really helps to point them. He's just an incredible connector. And I think there is something really valuable, speaking as an entrepreneur and kind of trying to distill your story into your pitch deck, trying to answer the questions that TCA will ask you, because almost anything you apply to is going to ask you sort of similar questions. And it's a really helpful way to sit down and say, okay, am I really ready for investment? Do I have a clear understanding of what I can do with this money? Because it's almost scarier when you get the money as to like, now how do I spend it? All right, I have expectations now. Before we move on, Maisha, somebody asked a question, if you could expand on your notion of additional pressure or expectations of VCs versus angels.
Yeah. I mean, I feel like with the VCs, to the point that you raised earlier, Sonia, they are big funds, they are institutions, and they operate on the premise of getting that return back from their investment. And so when I was speaking, I was thinking specifically about the fact that they're going to be looking for board representation, which means they're going to be in the mix of your business a lot more than an angel investment would be. I think on the flip side, when I think about angel investment, I mean, we still obviously are interested in your success and care about your business succeeding, but it feels like it comes more from a mentoring and advising role versus needing to have a seat at the proverbial table.
Thanks, Maisha. That's really helpful. Okay. Next question. Other than through TCA, how do you find deals and how do you want startups to find you? And I'll just say somebody asked in the chat about whether we invest as angels outside of Tech Coast Angels. And I think that almost every Tech Coast Angel member probably does. I know for sure I do. I'm part of a few different syndicates, some that are more based on affiliation. So I'm part of something called Gay Angels, which is a gay angels network, part of some for women. So it's definitely not something where you have to invest through TCA. But if you are investing outside of TCA, how do you find deals? Do you bring deals to TCA and how do you want them to find you? And let's start off with Sami.
So I'm new to this whole world and I'm coming from the graduate student perspective and from the life science perspective. And so for me, I'm thinking about going to my network and trying to find people to talk to and connect with, going into pitch competitions and trying to get money that way. And then obviously going to VCs. That's kind of where I'm coming from. But yeah, how do you want startups to find TCA? I think just through networking is probably the best way. I don't know. What do you think, Sonia?
Well, let's how about Shawna? How do you typically source deals and how do you want us to find deals?
We are a software product development company, medical devices. So a lot of startups come to us, and because we have the ventures in our name, a lot of times they're coming for support services in exchange for equity type of deals. And so we're found a lot through our website. And then to talk about kind of outside funding outside of TCA, we do fund companies outside of TCA. Because of COVID, we kind of put a little hold on that, but we were investing $25K per startup. And we were doing that regularly.
What about you, Maisha?
So a couple of things, and this is all so new. So if any of you are interested in angel investing, don't be nervous about like dipping your toe into the water. So I had a good friend who introduced me first to TCA. She also introduced me to another organization that I was interested in investing in, and that networking kind of started to branch out for me. I am a member of Interlock Capital as well, which is another syndicate. And then one of the organizations that I am a member of, an advisor for, called Innovation City, they are all about finding underrepresented founders. And so I do a lot of work with them. I think they're great. And that's going to be a great source for finding new deals as well.
And what about you, Christopher?
So I have invested prior to joining TCA in a couple of different startups that came to me from personal connections. Since TCA, what I did was I put that I was an angel investor on my LinkedIn profile, and that has been catnip for a bunch of people to reach out and start trying to either send me their pitch decks or get a conversation started, which has been a good thing. But then to build on what Sami said, I think the pitch competitions have also been a good opportunity. There's been a couple through San Diego Venture Group and TCA and so on, where you get a chance to go talk to the founders directly and ask deeper questions one-on-one, which has been those have always been great events to go to.
And I will say, so I've been doing a project with TCA looking at looking at our pipeline generally and where we source deals, and the vast majority of deals that we actually fund come through Tech Coast Angels members that are tapping into their own networks. I have found a number of deals through Lolita Taub, who used to live in San Diego. I don't think she does anymore, but she has an investor matching tool. So for founders who identify themselves as being underrepresented, whether it's by race or gender identity. And so I found a number of deals that way that I've actually invested in. There's also a group syndicate called Backstage Capital, likewise focused on underrepresented founders. I've invested in a few of those, usually at a pretty small dollar amount is the minimum. As I mentioned, Angels is a different syndicate, and there's another one that I just joined for women that's local, and I'm blanking on the name, and I'm also a member of Interlock Capital. And I find they fit different pockets, right? So, some of them, like with Backstage Capital, sometimes it's like $1,000 minimum. It's a much lower price point. Others have a kind of $25,000 or more. And so I'm just looking for different types of deals. And in none of those groups, typically, do you have to invest, right? It's just, here's a promising startup, come to the pitch, meet the founder if you want. And so for all of those, it's not like a huge drain on my time, but I also feel like Christopher, having said I'm an angel investor and putting it out there, I'd get plenty of cold calls, although most of those are not as good as the ones I'm finding in other ways. And that kind of tees up this next question, which is, what do you look for when deciding to invest? And I mentioned before briefly that there's this idea of an investment thesis, which is basically just, do you have some kind of screening criteria of what you're looking for when you invest? So let's start out with Christopher this time.
So for me, what I typically look for are things that I'm most comfortable with. And my background has been in software. So I'm typically looking for software-based companies, people who are looking to do a SaaS rollout where it's easier to scale things up, both in terms of demand, but also just geographically, where they can take advantage of a big market very quickly. And so typically that's going to lend itself more towards either consumer or enterprise software solutions. And on top of that, I'm also trying to look for, even if they don't have it in the first round of the pitch deck and so on, I'm looking for the possibility that there's a platform strategy here, something where they can continue to add more and more services, get somebody locked into their particular platform and be able to build revenue in the future. If it's just a one-trick pony and they're like, hey, our software just does this one thing, not as interested in that. So I'm typically looking for more of a platform play as well.
What about you, Maisha? Do you have a thesis?
I do, and it's somewhat similar to Christopher's. So I'm looking for, I'm really interested in SaaS as well these days for the same reasons. I think technology and anything as a service is starting to really be where things are at. I look for market differentiation as well. So are you offering something that's new and hasn't been done before, and are you doing it in a creative way? And then two other pieces that are really important to me are diversity and social good. So I'm very interested in founders who represent diverse backgrounds and in social benefit. What's it going to do to increase and encourage humanity to move forward, are things that I'm really interested in.
Yeah, so I'll just throw in, those are actually the latter two that you said, right? That's my investment thesis. I will only invest in companies with what I'd call an underrepresented founder that are doing something that's for the benefit of the world. So I do care that they're going to make back money, but, and somebody asked this question about the risk that the startup goes to zero. That's absolutely a risk that every angel investor should take to heart to start with, right? Your money could turn into absolute zero. So don't invest more than you can afford to lose. And even if you don't lose it, it's usually a pretty long time horizon before you get it back. So I am cognizant of the importance of the financials. And I think a startup has to be at a stage enough where I feel like the money is going to help them, not hurt them. But for me, that sort of social mission comes first. I want to see that they're going to create good jobs, that they're going to build a company that values diversity. What about you, Shawna? Do you have a thesis? And if so, what is it?
Yeah, I do. And I agree with Christopher. Like, I stick to what I know and where my passion is in medical devices. And so I have an interest, I don't know if it has to do with the common good, but I have an interest in like niche markets where there's an unmet need that really interests me. And I feel like that could be, groundbreaking or life-changing even to address some of these untapped markets. I also look at the product and the team maturity. It is of interest to me to see if the team has done something like this before, have a proven track record. And if not, they have really good advisors that have a good track record. Revenue is definitely a plus, but that's really hard in the early stages, but it's definitely a plus. But if there's no revenue, I really like to see like letters of intent to show market interest. Like, have they validated this with the market, right? And do they have a clear, unmet need that they're striving towards? That's basically what I'm looking for.
Yeah, and I would say one other element that I've heard a lot in doing angel investing, and one of the benefits of TCA is that you're around people who have a lot more experience. At least for me, when I first got started with angel investing. And one thing that I was told to look for is coachability. So does a founder seem like the kind of person that will take advice? And maybe it's not my advice, maybe it's, if it's a biotech company, my advice is absolutely worthless, but will they take the advice of the advisors, the mentors, the people who have done this before and can actually really help them? Because very often you'll run into founders who aren't willing to take that kind of advice, and then they end up making the same mistakes that a lot of other folks have made. And that's not a very desirable quality. So I think there's, the default in any of investing is to say no, right? Because it's, somebody's asking for a lot of money and there's a lot of opportunities. And so that's definitely one of those things that will not trip the wire to yes, if I sense that there's not that kind of coachability or willingness to learn and to listen. So getting into the brass tacks a little bit, what is your process for analyzing investment opportunities? And let's start with Shawna.
I actually have a checklist. I have a due diligence checklist. I look at every aspect of the business, but I'm very keen on the technology because I come from a medical device background. I want to gauge the maturity of the product and the product development life cycle and the clear path towards commercialization. So while I do look at the numbers and I do care about that aspect of it, I'm really focused on the technology piece.
What about you, Maisha?
So the product is important, but I come from a background of marketing. So for me, it's really about, is there really a market opportunity for what this thing is? And does it serve a real need? Because you could have a great widget, product or whatever, and no one actually cares, then it's not going to go anyplace. And then what's the kind of path that they're outlining for how they're going to end up growing and getting to market is pretty important to me as well.
Yeah, I would say for me, what I would typically do is review the deck, and then I will do like a, Google stalking to try to figure out everything I can about the company, its competitive set. I like to see founders that are scrappy, that are, finding some way to get publicity about what they're doing, or that have like inserted themselves into interesting conversations, things that are relevant to what they're doing. Not that I just want to see like random LinkedIn posts, but I try to get a sense of who the founding team is, what's the background, even if they haven't raised a lot of money, have they been able to use what they have to do something interesting? And then I really like to see a pitch. I like to talk to the founder. I feel like and we'll get into the question of biases in a second, but I think it's actually really important to get a sense of them as a person, because when you found a startup, there are so many points where it's really easy to quit because it's really hard. And so, you know, if I'm going to put my money in, I want to know that you're actually going to take that and do something with it, that you're not just going to quit, that it's not going to go to zero when you're faced with the inevitable challenges that a startup would face. What about you, Christopher?
So I could typically come at it from a little bit of a different perspective. I know that the team is the most important thing to the success of this, because if the team can't change and pivot and so on, then the whole investment is going to fall apart. But I always start off with technology. I'm always attracted to that first and trying to make sure that I fully understand how does it work. Then what's the moat, you know, what's the thing that's going to keep them doing something unique and protected. And then I get into kind of like the business model and what the product roadmap is. And then eventually I start to figure out what the, you know, is the financial aspects and the commercial terms reasonable. But I know that starting off with the team is the right academic answer, but I just know also my default way of working through these things. But to the same point that Shawna brought up, you know, I also have a due diligence checklist looking at both the technology as well as the commercials. On top of your stocking as well that you do, also reaching out to customers if they exist to talk to them about, you know, how do you like the product? Is this something that you can't live without? And also if there's any previous investors either in this particular investment or if that particular founder has done another company before, reaching out and trying to find who those investors were and what they liked and didn't like about working with that team.
I think that's great, Christopher. And I think all of this really, everybody's answer points to why being a member of a syndicate is really helpful, right? Because we're each bringing in different expertise, different perspectives, and different ways of looking at similar investments. It's also a lot, right? So if you imagine that you're trying to build out a portfolio that has some diversification, if you have to do all of that for every company, it quickly becomes burdensome. And so to the extent we can share that responsibility across a group of people, it's quite helpful. Okay. So how do you reduce or eliminate personal biases when deciding whether to invest? And I'm going to start with you, Maisha, because I know you have a lot of thoughts and expertise in this one.
Yeah, and a lot of passion for it, right? I mean, if we're being really honest, especially here in San Diego, there's not a whole lot of diversity that we end up seeing in founders. And so if the people that you see coming through look the same, you know, white, male, then it becomes really easy for us to be judging everyone else based on that. And so, but it also can work the flip way for me as well, right? I'm very interested in underrepresented individuals. And so I found myself at times getting really wrapped up in who that founder is versus what they really are offering. So I force myself to have a lot of conversations with individuals so that I can make sure that I am not allowing my own perceptions to get in the way. I also will bounce things off of people who are close to me to make sure that I'm not having a blind spot for something. And then I really do try to look at the pitch decks as well and just understand the merits of what these products are and go back to where I started, which is what's the market opportunity, what's the need that's being served outside of just thinking about that individual founder, sorry.
That's great. Christopher, is this something that you've given thought to or touched on? Oh, you're on mute, Christopher, sorry.
Sorry. I think the toughest thing, especially when you're first coming into angel investing, is you're sitting in a room full of other people and they're all nodding their head and saying, yep, this sounds like a good idea. We should definitely do this. And then you're like, oh, this is FOMO if I miss out on this particular deal because clearly everybody else in the room is smarter than me and I need to do this. But I think you also have to fight your own psychology and pick at things and say, I don't feel, there's something I'm not feeling here, and kind of dig into what that is. Because that might end up being the difference between a good investment and a bad investment. And I think sometimes that bias is leaning towards you coming in as a new person. You want to learn and you want to get your hands dirty as quickly as possible, but also having the restraint to sit back just a little bit and kind of go, let me just kind of read the room a little bit more. Let me build a little bit more experience before I jump into this fold.
What about you, Shawna?
For me, I think I need to leverage my checklist to stay objective because I can really get wrapped up in like the passion and the excitement and the likability of the team, right? When I do think the team is important, but you really need to look at the numbers, right? Do they have a viable business plan, right? Is there a market need, right? Are their projections reasonable, and really look at that aspect of the business. And so that checklist really keeps me keeps me being objective, basically. It helps me to stay objective.
That's great. There's some really interesting work by a professor then at HBS called Dana Kanzi, and she has a TED Talk. And what she found in doing an analysis of fund founders was that when women pitched, they were given questions that focused on downside risk. So how do you know that your competitor isn't going to take over and do this for you, right? Whereas when they were asking questions of male entrepreneurs, they were asking sort of forward-looking big picture projections. Well, how much market can you capture? And the result was that was one of the key reasons why women founders were raising less money. And so for me, a lot of this comes down to trying to think about what are those unconscious biases that every investor has, and what kinds of questions am I asking? Am I only thinking about downside risk for women investors or for underrepresented founders? I also find that one bias I see very frequently is that we tend to code underrepresented founders as earlier stage than a comparable white male founder. And so that's definitely something where I try to, say, okay, really think about where is this company in this stage, and am I thinking about that by reflecting on who the founding team is, as opposed to like where they actually are with their product or their service. So that's something I think it's being very conscious of what those otherwise unconscious biases can be.
Yeah, I think that's a good point. I think also bringing in more diversity into the investment groups. Like I know Tech Coast Angels is working really hard to create more diversity within the investors so that the pitches are treated a little bit more fairly and less biased. And I've seen something similar, Sonia, where it's a group of ladies and a group of one guy, and they're treated very differently to what you mentioned. Like the group of ladies, even though they had a stronger product offering, they were kind of deemed to be less ready, right, than the male, one team of one entrepreneur. And we have seen that. So I think it is important for us as investors to be very conscious of that, right? Because it does happen.
Yeah, that's a great point, Shawna. Thank you. Okay, so sort of flip side, what are the red flags that would make you not want to invest? And let's start with Shawna.
Oh, okay. So I would say one of the red flags I see is when a company comes in and they're saying, I only need 500K and I'm going to launch my product. To me, that's a red flag, because normally they don't need just 500K, right? And to me, that kind of shows that they're not willing, or they're naive, that they're going to actually need follow-on funding, right? Because funding is going to be a full-time job. And so if you see them kind of one and done, and that doesn't really necessarily match, then to me, that's a red flag, because they're not being realistic. And they might be just putting that out there because they're trying to get the funding, where really if they need $30 million, they should say, I need $30 million. This 500K is going to bring me here, right? Then from here, I'm going to go here, right? Because it's very milestone based. So to me, that's a big red flag.
No, totally makes sense. What about you, Christopher?
For me, one of the biggest, starting off, there's so many potential red flags that I think sometimes you can also talk yourself out of every single investment by thinking that, always looking for the reason not to invest. But I think you have to come at it with a little bit of a risk-based approach on that. However, one of the things that's an immediate turnoff for me is that somebody broadcasts and advertises themselves as being a serial entrepreneur, because it comes off as a little bit arrogant, as somebody who is going to just be there to flip the company and not stay there to work through the struggle of it and get it to where it needs to be and be completely invested. It's not to say that I'm not interested in people who have a successful track record, but I don't want somebody who's the equivalent of a house flipper flipping something at a low valuation. I want somebody who's deeply and personally invested in that particular product. And then on top of that, anything else that shakes the trust of the investment that could be found out through due diligence. So like if you start going through and you find out that they've manipulated some of the forecasts of what orders are going to be, or they've misrepresented that they have another commitment from a customer and things like that. Those are the big red flags at the beginning.
No, I absolutely agree with that, Christopher. I think that's a really great point. Definitely the financials is one piece that's critically important. And I often find if it's, there's always with forecasting, it's never an exact science, but if it's so unrealistic, or if they're, the other side of it too, is sometimes there's just massive errors and it just tells me they're not ready, right? Because it's not so hard to find the resources you need to get your financials in order. Sorry, do you want to add, Christopher?
Well, sorry, continue.
No, I was just finishing the thought was that to me, the thing that makes a great entrepreneur and that's going to make a great company is if you're scrappy enough to figure out kind of what you need. And so if you know you're not a great modeler, a financial modeler, totally fine. Like that doesn't necessarily make you a good or bad entrepreneur, but be able to access the resources you need, find the people you need to help you with that. So if you're going out for investment and you're showing me a model that's just totally broken or wrong or things are weird, it just really shakes my ability to believe that you can handle everything else in your entrepreneurial life.
And I think just to add on to the financial part, we also know that, when you're doing a financial model of your first round of investment, it's never going to be accurate, right? It's either going to be completely off on the high side or completely off on the low side, but it's never going to be 100% what you say. It's just looking through and looking at the work that's been done to say, have you thought about all these different scenarios and what happens if this assumption changes, or what happens if this dependency changes? So don't let that part scare you away from bringing something. But there are other things that shake out through the due diligence. And like we talked about, I'm not a life sciences investor, but there have been pitches that we've seen where somebody's overcommitting the fact that they're so far down a road of FDA compliance and so on, and then you start to kind of dig into that, and even without a background of this, you're kind of like, that doesn't sound right. Those are the kinds of things that immediately jump out at you.
Definitely. And as an attorney, that's actually one of my biggest things is if I'll ask something about regulatory compliance and they haven't heard of it. That's always like that makes me nervous. You don't have to be an attorney for sure, but if you're not even aware of where you might trip wires, then I'm very concerned. And Maisha, what did you want to add?
Yeah, I think about how they handle their interactions with me, how they handle their cash, and how they're handling their customers. And so just a little bit on all of those. From the cash perspective, I'm looking at things like how quickly are they burning through cash and what's the kind of runway that they have, because it's going to be an indication to me of how frugal or how smart they're going to be with managing investment dollars going forward. In terms of how they interact with me, I actually like to have a lot of conversations, because I think the more you interact with someone, the more you kind of get to see. And I've had some investors who are super defensive and they get aggressive over time. And I'm thinking, if you're doing that with me while you're still trying to raise money, then what's it going to be like once you actually have my dollars? And so that's a super red flag to me. And then the third, around the customers, I want to make sure that people are testing the positive assumptions about their product with customers, but also the negative ones. So if I'm only hearing really great things, or they're only going after a certain type of audience and not getting the flip side, then I'm worried about them kind of being tunnel vision about their product and understanding really what is the growth trajectory going to look like for them.
Yeah, that's great. And so I'm going to start with Sami this time. Why did you get involved with TCA?
Yeah, so going into graduate school, I thought that I wanted to become a professor and stay in academia and have my own research lab. But quickly over, the last 3 years, I've shifted my vision for what I wanted to do with my career. And so I started a career development blog where I got to learn about all of the different careers you can do with a PhD. And the careers that stood out to me the most and made me the most excited, curious, wanting to learn more were all the careers revolving around entrepreneurship, investing, VC, startups. So that's basic. So that was in almost a year ago. And so then I was like, okay, well, what do I need to do to break into this field? And so I reached out to the people I knew who were involved in VCs and entrepreneurship. And one of my friends was, she's at Two Bear Capital, who sponsors TCA, and she knew people at TCA. So she got me in at TCA. And so I really wanted to join TCA because I wanted to learn how this all works. I come from a science background, not a business background. And so this is just a great opportunity to learn about how to give a pitch, all of these different things that you guys have all been talking about. So that's my main reason for joining TCA, is just to learn as much as I possibly can before I graduate.
Great. What about you, Shawna? What got you involved?
So I have my own business. I have a consulting company, but before that I was pitching to groups like TCA. And then I just had to think about a moment, like what my objective was for actually trying to get fundraising. And through that exploration, I realized that I just love startups and I want to help technology. And I saw how difficult it was for me to obtain funding and to get the right advice. And so I wanted to just be part of that ecosystem. I think was really, really my desire. So I want to contribute. I want to give back. That's why I don't have a product company. I have a product development company, because I want to share all my years of expertise to help other companies be successful and launch their products on time.
Very cool. What about you, Maisha?
Yeah, I was interested in angel investing for quite some time, and TCA felt like the right place to start. Just because there were so many people who had experience. I figured I could learn from everyone, and be able to kind of come in and bring some new thinking into the organization as well. Like Shawna, I really enjoy giving back. So the idea of also being able to mentor or advise new startups was came in handy. And then the third thing is, one day I could see myself pitching, and I wanted to make sure that I understood exactly what was going to be needed to get there. And so it's been great learning.
Very cool. What about you, Christopher?
So I got my first taste of doing angel investing when I was part of the Rady Venture Board, which was really kind of fun, or the Venture Fund rather. And I had so much fun watching the pitches and so on that I thought, eventually I'd like to get into venture capital and do this full time, either as an angel or as but what I really enjoy about it is just getting pitched on all these different ideas that are so different than the things that I'm having to deal with on a day-to-day basis. That it's this intellectual catnip of like, oh, I wanted to learn about this topic or this science or this technology, and having all of that be a little sandbox is fun for the learning aspects. And if I make some money off it, great. But it's more about honing those skills of looking for good deals for later use, and networking with people that I otherwise wouldn't interact with on a daily basis. So I've really enjoyed it from that perspective.
No, that's great, Christopher. So I actually am a member with my wife. We joined partly as a social thing. We really love the idea of using angel investment to build the community. I think entrepreneurs are the ones who create these incredible companies that then employ people that build out communities. And so we thought that was a better use for our limited funds than just throwing it into the stock market or something that's you're not able to really control it or direct it in any way. And we figured if we were going to try our hand at angel investing, we should work with or learn from other people who knew a lot more than we do, and leverage that kind of group understanding to be able to get involved. And I'm really glad we did, because we've met some great people and learned a ton about angel investing. So our next set of questions are a little bit more, I would say, technical on the angel investing side. So I'm going to leave it open for any of the panelists to address rather than call on folks, because I think it's more like, if somebody answers it, there's probably less to add. So the first question is, what is a term sheet and why is it important?
I'll start since no one's really jumping at it. I think about it as just an outline of the terms and conditions of what your deal is going to look like. So, think about it as, am I going to get equity? Am I going to be getting money back in terms of is this debt that someone's going to be paying me back? What's the time frame and the time horizon going to look like? So there's a lot of different pieces that are built into a term sheet that help you understand when you can expect the return on your investment, what that's going to look like. And there's a lot of different components that go into it. Is this going to be something that's going to come back to me as equity? Am I going to be able to have an opportunity in the future to get equity at a discounted rate, which starts to look at valuation cap? So there's a lot of different ways that deals can be structured, and this term sheet helps you to really understand what you're putting your money into.
Perfect. And what is a SAFE? How does it differ from other deal structures?
Well, it's a more simple, by definition, it's a simpler document for being able to accelerate the deal from the investor side, but also protecting the entrepreneur's side. And it's typically going to be a one-page document that allows you to more or less only have to negotiate on what the valuation cap of the deal is going to be in terms of protecting the low side for the investor.
Great. Okay. So the last question before I turn to our Q&A, what other advice do you have for entrepreneurs or aspiring angel investors? And let me start with Shawna. We'll go back to our first order.
So I would say take advantage of this wonderful ecosystem we have here in San Diego. San Diego is like just an incubator in itself. So there's tons of resources available, right? You just have to be open to network. So I would just say stay focused, positive, establish strategic partnerships and network.
Great. What about you, Maisha?
Yeah, I would say don't be afraid to ask, like reach out. There's been a couple of people who've already kind of reached out on LinkedIn from this. I think that's exactly the right thing to do, and ask people questions. I didn't know what I was doing when I first started angel investing. And so the only way that you learn is by networking and asking. So, and if you're an entrepreneur, I would say, make sure that you have a couple of the things that we've talked about checked off, right? Do you have a viable product? Do you have a potential market? Are you already seeing some sales? And maybe get some advice from a couple of people before you come in and pitch, but you want to make sure that you're somewhat set up for success before you come in and pitch.
What about you, Christopher? Oh, still on mute.
Having been on the other side of the table, I would say get used to hearing no, but don't let it discourage you. You're going to hear no a lot, and it's not because the idea is bad or anything like that. Sometimes it's just not the right match for the particular investor. But when you're talking about, TCA San Diego, there's something like 200 or a little bit over 200 investors just here. And so just from a pure statistics perspective, you'll eventually find somebody who feels that this is the right investment for them. And then they will also help you get introduced to other investors as well. So look at it as a networking opportunity, even if they say no.
Great. What about you, Sami? And if you want to broaden it to folks that are interested in entrepreneurship as well.
Yeah. So going off of what everybody said, it's just about really like broadening your network, reaching out to new people, going to events like this, taking advantage of all the resources on campus at UCSD, such as the Entrepreneurship in Residence program that Sonia is part of, and getting involved in entrepreneurship programs. There's lots at UCSD through the Rady Business School, and getting involved in angel groups like TCA and just learning as much as you can.
That's great. And I think I'll echo what everybody else said. I think networking is number one. If you're an entrepreneur, there's so much you don't know that you don't know. So many mistakes you're likely to make that others have made before you. And I think for me, that was the biggest takeaway during my time as a founder is just other people can really commiserate. And being a founder is really lonely a lot of the time, especially now when we're not really in person. And it's just sometimes helpful to talk to other people who've been through similar things, can shed light, can bring their expertise, can introduce you to somebody else. Even if you're not looking for funding, it's really helpful to start having those conversations of what it would look like when you start doing that. It's a lot more attractive to an angel investor if you're having that conversation early, you're asking for input, and you're not even asking for money, right? Find great mentors, find folks who can open doors for you. It's a multiplier effect for everything else you're going to do. And likewise with the aspiring angel investors, I think joining a network like TCA is really, really helpful. You understand the lingo, you understand what to look for in a term sheet, you gain from the wisdom of other people who know a lot more about different areas. So that would be my strong recommendation. So we've got a few minutes left for the remaining questions. I'll just say, some folks have asked about applying to TCA, please apply through the website. I think the local website is tcasandiego.com. There's also Tech Coast Angels has a number of chapters. So there's also the Tech Coast Angels website. I think that if you're going to apply, you go to that website. And because I'm an entrepreneur in residence here, I also have a UCSD email. So feel free to email me, steinway@ucsd.edu if you've got other questions or thoughts. Let me just take a look quickly at some of the questions that folks have asked, and we'll just spend the next couple of minutes looking at those. So somebody asked, what are the best UCSD resources for fundraising? I wonder if Paul, if you're still on, if you want to take that one. Is Paul still on? Maybe not. I know at UCSD, there's a ton of resources for folks within the community. There's something called the Office of Innovation Council. That's what Paul heads. That might be the best place to start. It's really going to be dependent on what if you're a professor and you're in the biosciences, that pool of funding is going to look very different. But Gloria, who is also on, runs the basement. So if you're an undergraduate, that's a great place to go. So I'll start with that.
I'd also
At
add
Rady, we have StartR and a couple of initiatives there as well. Sorry, Christopher.
And just to go on that note, the program that I kind of plugged at the beginning, Nucleate, is similar to like an accelerator program. So there's lots of programs, StartR, IGE, Nucleate, and a bunch of other programs. Some are more specific to undergrad and some are more open, specific to like graduate students and postdocs and scientists.
Great. Somebody asked, how do you find out the type of product or company that an angel investor group is most interested in investing to see if your startup fits? So I would go to Crunchbase. Crunchbase takes lists of lots of funds and lots of startups, and it will tell you, like, it's not perfect by any stretch, but it's kind of an indicator of who's interested. If it's a venture capital fund, it will usually have its investment criteria on its website. You can also look at LinkedIn and see if somebody lists themselves as a board member. Typically, that means that they've made some kind of investment. The other folks have other ways that they've found out about that. Okay. Somebody else asked, and I'll just do this one quickly because we've got 2 minutes. We've noticed that angel groups usually need a % of angels to agree to a deal before investing. My question is, if an angel loves a company, do they usually go ahead and invest outside the group? Is that normal or rare? Basically, we're trying to figure out if we get rejected from TCA, is it worth approaching individual angels for a smaller check? So if something comes to TCA and the general group says no, any individual angel can reach out to you directly and say that they're still interested. That happens, I wouldn't say all the time, but certainly with some frequency. I would say for most individual angels, unless you already had an existing relationship, it would be annoying if we've already considered you as a group, unless you knew that person had exhibited some kind of particular interest and wanted to be approached separately. Okay, so I know we've got more questions, but since we're at time, I also know that Rachel, you had one announcement you wanted to make.
Yeah, I just wanted, hopefully everyone can hear me. The basement is actually going to be starting a crowd-surf campaign starting in May. I'm just gonna drop this, but for anyone that doesn't know a lot about the basement, it's basically a fantastic way to support our students and support innovation on campus. So that kicks off May 1st. And that was my only announcement.
Okay, awesome. Well, thank you all so much for your time and for your excellent questions. We really appreciate it.
Thanks for moderating, Sonia.
Thank you.
Thank you so much.
Bye, everyone. Good afternoon.
Bye.